Good morning all and welcome to this morning's video. So this is going to be a slightly quicker video than normal because I have a trading webinar to attend at 7 a.m. and it is currently 6:34 a.m. as I speak. So got to get this done and processed and uploaded before that webinar. But thanks for tuning in. I have two pairs on watch today. Those are pound Swiss and wheat USD. Before I start, just a reminder to you to think probabilistically if you're not doing so already. And I say that because, as I've mentioned previously, when I upload these videos to YouTube, one of the things I study the metrics, not in a great deal of scrutiny. I don't give them a great deal of scrutiny, but one of the things I've noticed is that when I take a loss and when I post a trade recap, being transparent rather than trying to hide my losses, I notice that I usually lose a subscriber or two, which any other time almost never happens. Okay, so I don't care if people unsubscribe. I'm not bothered in the slightest. But one of the things I have noticed is that that happens when I post a loss, and what that tells me is that people think, or a minority maybe of people think, that when you take a loss, they think this strategy doesn't work, I'm moving on to the next YouTuber, okay, or next tutorial. So that tells me that they think that there's a strategy out there that doesn't produce losses. And as I always say, if that's the case, then Warren Buffett has told me to tell you that he's very keen to hear from you if there's an investment strategy that produces no losses. So it's absolute nonsense to think that there's any investment. I get that all the time. I'm an online marketer by trade, and I often get people saying to me, what can you guarantee from this investment? I being transparent as I am here, I say there's no such thing as a guaranteed investment. As in, everything comes with risk, and the people that ask for a guaranteed investment never purchase that when I respond that way. But I'm more interested in being honest than trying to take people's money from them. So that's what I say. There's no such thing as a guaranteed investment. Every investment carries risk, just as staying in a 9-to-5 job for the whole of your life and never doing anything with your life, that's a risk as well. But people don't think of it that way. They think of a 9-to-5 job as certainty. And in the short term, it might be, but in the grand scheme of things, it's definitely not a guaranteed return on investment. I can assure you of that much, as someone who's been working for themselves since 2012 and who's made more money working for myself than I ever made working for anybody else. Anyway, I digress. So pound Swiss is my favorite of the bunch. So on the higher time frames, we have this high here. I've talked about how we have these sideways corrections, which is what we typically see with pound Swiss, these long sideways corrections. Okay, and the origin of the move, which is the stronger magnet where price is more likely to gravitate back towards, is the start of this. Okay, so here, where it all started, this high here. And the clue was that we had a couple of near misses to that area. Price usually gravitates back towards the high, which it near missed to. And sure enough, when we broke below here, okay, we start to move with a bit more impulsivity. And right near the end, we get what we call an ending structure. So we get this big corrective channel there, and then we start to see the structures that we typically see at an area of value. That was also a clue that this was a high area of value, okay, because we often see these at an area of value, okay. We then break out of the structure. So we break out of the structure here. I wish TradingView would fix that. We break out of the structure. Many people that got long here were too zoomed in, not realizing they're trading into a valuable area for a sell. Okay, you could have made some money in this instance, but as I always say, if you constantly buy the highs and sell the lows, which is what the amateurs are doing, then you're constantly capping your profits. Okay, we break above. People think it's going to the moon. Apparently, this is now support because we've broken above. We come crashing to the downside, which is what we typically see. And now I'm just seeing this as an impulse correction continuation to push lower. Okay, and notice previously how I was looking for trades within here. I said yesterday, so the forecast, as I've said, trading is not about being right. Okay, so previously, if you remember, I had a ray line on here, and I took a loss here. Okay, now what I said is I was talking about stop loss placement. And I said to you, let's just get that trade back on the chart, actually. There we go, the trade. So I said to you, if the reason I cropped through this wick is because if price broke above here, these two highs, and retested the back end of this, okay, then that, and it still didn't commit, okay, which it didn't, which is why I took the loss there. If it still didn't commit, then it's likely forming something more complex. It's likely, although I had this on watch yesterday, I said to you I thought it wasn't likely that it would commit from here, because if it's broken above here, okay, and retested the back of that and still not committed, then it likely didn't find enough liquidity here, and it's likely pushing up to the next high or forming something more complex, okay. And you can see, if you look at what happened, if we just put that guy back in his box, okay, if you look at what happened, we kind of came down, retested all of this, and then pushed up. So price clearly didn't find enough liquidity in this area. So I'm not surprised, and that's why I wasn't looking for a risk entry from the top. I was looking for a push down and a flag, because if price tapped into that area once and didn't commit, then likely you would have been tagged in and tagged out, because price is trying to find liquidity from somewhere, a greater area of value. Okay, so we're reading the market as telling us a story, and it's for us to be able to decipher that if we can. Okay, so with all of that in mind, if we look, where's the next area of value? Well, the next area of value is here. And you might think, well, why? Because there's multiple highs. Okay, yep, there's multiple highs. But this one, okay, there was a sharp move there and a sharp move down. And this area, there was an exchange of liquidity here where enough volume was exchanged for price to smash through the low of all of this consolidation. So that's likely where, if the liquidity is not sat at that high, but these two highs there, which it obviously wasn't, because that's why my trade didn't commit, then it's likely sat here, okay, which doesn't surprise me, because we've had an aggressive sell-off, okay, with very little pullbacks along the way, okay, and this is pound Swiss. Pound Swiss tends to correct for longer than a lot of pairs before continuing in the forecasted direction. So with all of that in mind, and bearing in mind that I don't have as much time today, so if we tap into the area of value, we push down and we get a 15-minute flag. In these instances where we get, this is kind of an M-style pattern. So we get a push down, we get a sideways correction, and then price comes back up. Okay, it becomes too voluminous. Okay, it's a lovely word, that, isn't it? It taps into the next area of value, and then we see that. And these tend to be very aggressive when they occur. So I do, although I kind of shied away from these for quite a long time, one thing I know is that these are quite aggressive, and a lot of the time you're shying away from things if you don't fully understand them. But I do understand them now. I've been trading for quite a while. And in these instances, especially when we have multiple inflection points above, which don't really hold much weight, but my rules are that where these M-style patterns are concerned, I always look for a push down on the 1 hour, 15-minute continuation, so 6 to 8 corrective 15-minute candles, and then I would look to trade this into that low for 5%. And then what I would do is I would measure it from the range that the little flag was in, the type flag. I would measure the 90% area there, and I would be targeting that low where price often pulls back deeply. Okay, so that would give me something in the region of about 6.5 to 7% to work with. Okay, so that is pound Swiss. We shall see what happens. Okay, so I've got the alert set just below the area of value. If it doesn't trigger, then no trade for me. And if we just measure this, just to touch on it, okay, so the ultimate target, so if we assume that the continuation leg out of an impulse correction continuation is of a similar length, so when we get an impulse correction continuation, the continuation leg is often of a similar length to the preceding impulse. Look where that lines up. If we get that precise, it lines up perfectly with that low, okay? So as I said previously, these are mathematical patterns that we look for. You might be thinking, well, why wouldn't I be targeting that low? It's literally just because I think at this low, because it's visible on the daily chart, we would likely get, we would likely get a lot of profit taken there. And I'm not really interested in sitting through that, because the pullbacks can be quite deep, especially on pound Swiss. Okay, so that is pound Swiss. Have I just deleted did I just delete the risk to reward tool? I think I did, didn't I? There we go. Right, let's get that back on the chart. Okay, so that is pound Swiss. Let's move on quickly to West Texas oil. Similar sort of story. Okay, one of the reasons this is lower down on the on the list. One of the reasons this is lower down on the list is because we've broken above and then retraced back beneath an area of value, but it's not a standout as pound Swiss. Okay, this stands out like a sore thumb, whereas wheat not so much. Okay, so less people will be paying attention to that than they would on the high on pound Swiss. But regardless, you can see that we have broken above all of this consolidation. Okay, we have the 1, 2, 3. We break above. People think it's going to the moon. People get trapped into the shorts too early here. They all get washed out, and then price completely capitulates to the downside. So I'm just seeing this as an impulse correction continuation to push lower. And you can even see the area of value. That's one positive about this, is that you can see the area of value on the daily chart. If we measure that, that would take us down to there, where we would have this, we would kind of have a 1, 2, 3, which potentially breaks below there. Okay, well, that's the low that the price would likely gravitate back towards. Okay, so as we drill down, you can see we've had a series of corrections there. We're trading through this low, trading through that low. Okay, sorry about that. We're trading through that and not above it, so that's good. And you can see here that price left a footprint. If the sharp move up, sharp move down, we've now, if we were to pull up from here, I think this could take a little longer, but if we were to pull up from here, we have a bit of a base to work with. We also have a little inflection point there. I'm not kind of seeing that as a 1, 2, 3 because it's not really as prevalent as that one. And also, if I was to, the only reason I would have a trend line on there is if I was looking for a risk entry, and I won't be looking for a risk entry because the first touch is a bit subjective. You could draw it from there, you could draw it from there, you could have it from there, and we also could come up to retest the back end of that. So what I'll be looking for in this instance is the following. In this instance, I'd be happy for a tap into the area and a 15-minute continuation. My rules with M-style patterns are slightly different. Okay, and then I'll be able to get short. I know the stop loss looks a bit weird, but the wheat has slightly different pip ranges, so the risk to reward tool would look a bit different, and then I would be able to manage that down to the low for something in the region of 2%. Looking at how it's forming, this does look like it's going to push a bit lower. So looking at how this is forming, it does look like we're going to push a bit lower because we kind of have, to some degree, an impulse correction potential continuation, which likely means we're trying to find liquidity from there, and then we'd likely push up. But I've just got this on watch just in case. We might get one candle that takes us down to there, and then literally a sharp retrace, which takes us up to that area. That was another alert going off. It's getting close to 7 a.m. So, and then I would be able to, what I would do in this instance is I would measure from this range. Whoops, what the hell is that? Right, let's get the right thing on the chart. I would measure from there to there, and look what happens. We have a low sat just above the low of this range. So in this instance, what I would do is I would set a take profit there, which would give us something in the region of 8.5% to work with. And if we measured the impulse correction continuation, that would take us down to that area as well. So that makes contextual sense. So I have an alert set just below the area of value. If it doesn't trigger, I will not be looking to place a trade on this pair. I think pound Swiss is the more likely to shape up today. We'll get to the area of value, but we shall see. Okay, so thanks for watching, folks. I hope you've enjoyed this video, and I'll see you again in the next one. Have a great day.